Good morning, trading world. It is January 6, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. 7:48 a.m., about 45 minutes or so before the jobs number. And the title of today's pre-market outlook is all about jobs, and how the Fed will interpret the data. Yesterday, we got ADP report data, and it did not sit well with the market and how the Fed will interpret it. We saw an additional 235,000 jobs, and job market overall remains strong. Let me see if I can bring that image up. All right, that's the image from ADP employment report. Now, remember, the Fed wants to kill growth to get rid of inflation, and by going after growth, a positive measure of stalling growth is loss of jobs. So the market directly read is the better the jobs picture means the longer the Fed will hold us to this fiscal tightening with rising rate policy. On the other hand, the worse the job picture looks means the Fed could possibly lighten up on raising rates, feeling like they have accomplished their goal of fighting inflation by stalling growth. We can see this directly impact the Fed watch tool, where at this moment there is a 60.1% probability of raising rates in February, 25 to 50 basis points, opposed to a 39.9% probability of raising rates 50 to 75 basis points. Now, looking at today, we have an employment situation report at 8:30 a.m., which expects a 200,000 number in non-farm payrolls. If we exceed this number, stocks fall, bonds fall, yields rise, and the dollar gets stronger. If we miss this estimate, stocks rise, bonds rise, yields fall, and the dollar gets weaker. The way I see things lining up technically is that we see a good size flash down, then a reversal, and a strong rally up. Outside of that, it is hard to get a feel for the market because so much is hinged on the employment situation report. With that, let me bring up the key levels for today. All right, here we are with the key levels of the day. Starting on the support side, we have our Jack support at 378 to 377 area, Queen support 376 to 375 area, which is going to be really important today, and then King support, which is huge, spans from 374 all the way down to 364. On the resistance side, our Jack resistance is 380 to the 381 area. Queen resistance is 382 to the 384 area. And King resistance 385 to the 392 area. The main thesis for today is small but bearish, closing below the 379.38 with a projected target low of between 379 and 364. The alternate thesis is bullish, closing above the 379.38 with a projected target high of between 380 and 392. The main channel we're in is 379 down to 364. The main channel below that is 364 down to 353. Also, the main channel above where we are is 379 back up to 397. Market strength and breadth started low and stayed low through half the day, but rose ever so slightly in the second half of the day. We are in a very precarious place where we are at a bottom and could go a little lower and get pinned down in a give up and sell into oblivion type of weakness. We have somewhat of a distance between the technical side, which is bullish, and the quant side, which is very small but bearish. That leads us into the scenarios of the day. Let me bring those up. All right, here we are with the first scenario, which could be our expanded range day structure. We could have an initial drop before the market opens, and I mean a really nice size flash type drop, and see a reversal actually before the open, and begin to consolidate and fight for and getting a strong rally for a good portion of the day after that. So that's our expanded range day structure, meaning we will cross back over the previous close represented by the blue line. Now, it could go another way based on where the report hits. We could see a flash up, down, consolidate, and then head down. So that's the vice versa alert for the expanded range day structure. Let me bring up the next scenario. All right, here we are with our second scenario, which could be a very odd rounded reversal day type structure. We could get a huge flash down pre-market, then start to rise and get a continued push higher toward the Jack or Queen resistance area, and find ourselves in a midday flash drop from around either that Jack or Queen resistance before grinding our way back up with the same energy of force we went up with the first part of the day. It could definitely be a crazy scene today. You definitely want to watch if report numbers go the opposite way. We could see a flash up and then kind of come down, and that could definitely end up working our way up even further on a more what's the word I'm looking for, but a more usual rounded reversal day type structure. And let me bring up the last scenario. All right, our last scenario is going to be our trend day down day type structure. We could open gap down from the employment situation and start with a rally back toward the previous close. We find resistance on or before that previous close, then begin the downtrend for the day. We could find a sharp drop during our midday time frame, and things could get well out of hand if we lose the 364 main channel support. So this is going to be something to watch for and be careful. I am holding on shorts, and I will cover at least half. If we do get a drop down and I see strength continue to weaken or level off somewhere around this 375.74 area, and I'll be holding on to the other half just in case things get out of hand and we break that 364 area. So those are the scenarios that I'll be watching for. This is not a day to play around. It will get real ugly real fast. Don't forget, your number one job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have in each position, and we manage that risk in accordance to our account size. I hope this helps. Please be safe. Don't try to go out and be a hero today, because we could have a dangerous swing either side of the fence today. Wishing you a positive trading day. Let's make it a great one. Be safe.